A day of heavy selling for the Indian equity markets, and the headlines look a little grim, with the Nifty 50 losing over 200 points or over 1% and the Nifty Bank falling below the 45,000 mark. Now, if you look at the picture under the surface though, you will see that most of that 200-point decline was accounted for by two counters. HDFC Bank, the worst performer in the Nifty 50, as well as Reliance Industries. In fact, HDFC Bank on its own accounted for half of those declines. We'll come to the why in just a bit. But take a look at some of the other factors. You had all of the sectoral indices lose ground in trade today, but understandably, the worst performers were the Nifty Bank as well as the metal index. Look at the top performers on the Nifty 50, few and far between, but they were the likes of Power Grid Corporation of India, Coal India, ONGC, Asian Paints and Sun Pharma. A bulk of the constituents lost ground, and the top losers were HDFC Bank, followed by JSW Steel, Reliance Industries, BPCL and Ultratech Cement. Now, talking about HDFC Bank, which was arguably the stock of the day, it lost because the management spoke to sell-side analysts earlier in the week and guided for a deterioration in asset quality on account of the merger with HDFC, as well as a contraction in the net interest margins, and that was not seen as positive by the street. Now, apart from that, Reliance Industries saw a large trade accounting for about 0.2% of the stake in that company, and that in fact was the reason why you saw that stock decline. Blue Star was another stock in focus, gaining about 13% on fundraising plans, as well as Apar Industries, which gained over 4% on higher volumes. Attention now obviously turns to the Federal Reserve decision on rates that will come out later tonight, and it's widely expected to hold rates stable. And besides that, we're also looking very closely at crude, which has been elevated. It is currently hovering around that $93.5 per barrel mark. But like I said, all attention to the Fed, and we'll see how that causes a reaction in the equity markets tomorrow.